You could argue that because, of course, the economy in Europe has suffered quite significantly over the last couple of years. You could say that some of that is because of the high interest rates we have seen, the very sharp increase in rates from the middle of 2022, which is when the ECB raised rates for the first time in ages. Remember, the deposit rate that we're talking about now was negative from 2014 until the middle of 2022, and that is the rate that everyone is talking about now, which has gone down from 4 to 3.75. There are other interest rates, of course, that their central bank uses, but yes, high interest rates have had their impact in terms of growth. What we're seeing now, of course, is that growth is beginning to pick up, mainly because of the expectations of lower interest rates, but also the fact that inflation has been coming down, mainly because of energy costs also lowering. And I think it was about time that those rates, the interest rates were cut. Now, too little, too late. Yes, I think in some areas of the EU economy and various countries, yes, you could argue that this is the case because some have suffered more than others. And one of them is Germany, of course, which has been hit by the war in Ukraine more than many others. What will happen next is going to be very important. I just heard your correspondent suggesting that perhaps we're not going to see another cut for a little while, but these rates are very high in real terms, given that inflation is slowing down. So that is a problem for Europe.
So how difficult is it for the ECB to find a policy, a path on interest rates that accommodates all of the Eurozone members? We're talking about 20 different countries with 20 different economies.
Not easy at all. And we have actually seen that inflation has dropped quite significantly in some countries, faster than in others. In fact, there had been a few months in the past when we had negative inflation, in other words, deflation, in places like the Netherlands and Belgium. And also we saw a very substantial decline in inflation in places which were very close to Russia. So when you look at the Baltic states, some of them had inflation of over 20%. When energy costs went up, and those have now seen a very substantial decrease in inflation, in some cases to near zero, certainly below 1%. They've come up a little bit recently, but it is extraordinary. Indeed, you're absolutely right. Very difficult to keep interest rates at a level that satisfies everyone. But unfortunately, you have the euro in the sense that, not unfortunately, because it's probably been a good thing generally, but the euro and having a single monetary policy has made it difficult for some countries and has also had an impact in some which has been considerably greater than in others, the high interest rates that we have seen.
What about outside of the Eurozone? When do you think the rest of the world, the UK, the US, for example, might follow suit and cut their rates?
Well, it's interesting you asked for the rest of the world, because the rest of the world, apart from the ones you just mentioned, have been cutting interest rates. So we saw a cut in Canada just yesterday by 0.25% again, from 5 to 4.75. We've seen cuts in Switzerland, we've seen cuts in Sweden, we've seen cuts in Latin America and South America, and also in Mexico. So what you've seen basically is that a number of regions of the world and some European countries have gone ahead and cut their rates. What's going to happen with the Bank of England and the Federal Reserve in the States? That's a different issue. The expectation was that there would be a cut in June. So we would have a cut later on this month when the Monetary Policy Committee meets, which is on the 20th. Of course, we have an election which has been announced, so they might delay cutting rates, so that it's not viewed in any way giving any political help to any party that way. So that may not happen. In the Federal Reserve, they're rethinking looking at what the inflation is doing in the US. And what we're seeing now is that whereas the market thought originally was all going to happen sometime in November, the first cut there, a lot later than some of the other banks, what they're now saying is that the softening in some of the inflation data that we've seen most recently perhaps will mean a cut in September, which of course in itself will be just before the presidential elections. So I think elections that you're going to be covering later on are intervening a little bit with all this, and the economies that need to see the cuts may see them slightly delayed.